Hello everybody, welcome back. Pumptown and friends, how you doing? So let's check it out. What do we got? Let's zoom in, take a peek. We did not get the equal lows tagged for the afternoon. I actually just took off after class, went for a drive, got a haircut, and yeah, so just getting back now and checking it out. We didn't take the double bottom here as suspected. So what does that mean? Likely this week at some point it's probably going to want to reach in there. And then so our grand finale was to the upside, something to be studied here. Okay, that right there in our 15-minute time frame, that's some there's something for you to mine there. Okay, and if you don't know what I'm talking about, you got some work to do. Okay, some studying there and there. I'll give you this one. Actually, I was projecting the next fair value gap, so that was just a fluke. That was just a fluke, Skywalker. But nonetheless, still something for you to mine in here. And then price came up and booped these candles, so some nice range in there if you were to be patient and catch something. Not too bad. So what do we got? It's just about 10 o'clock. Asia's made 51 handles. Not the worst thing, but still not too deadly. We made a very large range yesterday with a proper retracement, so I would be very careful tomorrow. Okay. Pay yourself quickly. Leave your runner if you get stopped out. Fine. Let it go. When you wake up, make sure you got your 88 box marked out. If London makes a big giant move like that did, excuse London from your analysis if you can. Whereas you'd start at like 7 here. Okay, so then for London lunch, you got a new 88 box and just ignore that you just pumped, because that's going to happen. This is going to bug you out, and that's how you do it. Okay, if you're in a bullish market and it just wants to go up all week, what you would anticipate is London maybe pumping up, right? And then London lunch, and then New York open, boom, and it would you'd just be playing it the same way. Okay, so kind of like that. Of course, that's the here, but the accumulation range is right there. New York AM Judas here, kind of 15 minutes early. Thanks, Trump. And yeah, so keep it real. As far as higher time frame arrays go, now that we're in a premium market, this is where I'm just like, okay, well, we could do things and we could not do other things. Do we want to come back to this gap? Do we want to come back to this wick? Are we going to find support right on this candle here? More importantly, this guy. Oops, that one. There's a chance that we find support right where we are. I'll leave that for you to study. What that PD array is. If we're going to be bullish tomorrow, where would I be looking to pay myself? Right here. Right there. That looks like mega bait to me. One thing is we did not close above half of the fair value gap here or the inversion well, the balanced range here. We didn't close above the midway point on this candle. So showing a little bit of weakness. Now, if you pull your fibs bearishly, you can see we've hit the bearish 786. So this could be means to a continuation to the downside in this little trend here, which I am totally open to, and we can hit that double bottom for non-farm and then maybe continue up or whatever. It is the beginnings of a bull flag. We're in the middle of it. So you'd be taking from this low here, drawing it out, that low there. So where's everybody stops? Obviously here, here, and here. So if non-farm wants to get weird, that's where if we made it start wiggling down here and then Friday comes and tags that, I'm turtle souping the snot out of that. Yeah, just a little bit lower. In this fair value gap right there. Oh man, that looks good. That looks good. So that's if it's bearish. I don't know. I can't tell you. I don't know. I legit don't know. At this point, I don't have nothing for you. We just take our range, our central bank dealers range, and we just keep it real simple. So, yeah, that's the 20-day IPTA data range. So we are sitting at equilibrium. Worst place to try and take a trade ever. It's so much easier to just let it come into its discount, show your model, show its hand, and then catch that puppy. Now notice that equilibrium is right in this guy here. So we could find support here, but make sure that your model's present and obvious. There is liquidity down here. So let's take that, mark off the end of that candle, so the beginning of this one. So that's the midway point there. And so this would be discount liquidity, and we could just go back on up. If we start tanking, this is an obvious PD array here. So let's have this on the chart. It's the new week opening gap. And then back to the daily time frame. So have that on your chart, because these things act like magnets. Oh my goodness. You know what? Take that high there and take that low there. So the body of the lowest in the swing here on that down close, and then this guy here. Add all these little gaps together. This is a event horizon. And it's a thing, and I'm not making it up as I go along. So this is going to be our measuring stick here. Above bullish setups, below bearish setups. Keep it real simple. We're at equilibrium. If we can get down into here and stay above it, then we can start thinking about buy-side liquidity again. In the case that it just freaks out, then so what? It just freaks out, and you'll have to get in sync with the order flow. That's all. I just want to cross-reference what we're checking out here in the 4-hour time frame. What a mess. It's not clear. It's not clean. It looks like a bullish, bearish money printer all in one. Just let your model be very obvious and present. If you're trading, I would just use this specific week as a means of studying, because there's so much for you to grasp in your studies. Compound that experience. So I'm going to rock tomorrow with no bias at all. Like no expectations, no bias, nothing really marked out. So at the beginning of this all, we were in between this bearish order block and this bullish order block, and nothing has changed. We're still there. 1, 2, 3 days of just not very much. Well, if you can consider 1, 2, 3, 4, 5. Even this guy, like, it's been a while. So we have these periods where it gets a little stagnant, but then it shows its hand to us. Then we have a viable trade and we have a bias, right? So that's what we're looking for here. It's really wise as a new trader to practice your discipline and learn how to just sit and do nothing. Hey, what's up, everybody? The best, Mario, Fit for Biz, Eddie, and Cisco. God bless you all and the rest of you watching. And the rest of you watching in the future. And we'll see you tomorrow. Peace out.